Okay, so what kind of situation do we currently have on GBP, GPY? Let's make a full breakdown. So starting from the monthly, what we can see is that clearly the market has been rejecting a quite strong level of structure. In fact, this level here had held the market starting all this move to the upside again, acted as very strong support here, preceding all this move to the upside. And again, the market has tested this zone lately and created this move to the upside. Specifically, what we can see is that the previous monthly candle had this shape. And if you remember, when you see a candle with this shape, what you expect is the next candle to fill in the wick of that previous candle. I spoke about this pattern many times and also made a YouTube video specifically about it. Going down on the weekly time frame, what we can see on the weekly, we can clearly see that the market first had created this W formation, and after W formation, we wanted to see this move to the downside. That is exactly what the market gave us. And then again, the market had created this candle here, which, as we said, is the candle that the next one is supposed to fill in the wick. So we definitely expected this previous week to be bullish, and that is exactly what the market gave us. Now, in creating this bullish weekly candle, what did the market do? The market also created this W formation, retesting a very strong level of supply, which is exactly the previous resistance here, from which all this move to the downside started, which is again turned resistance at this area, and we can expect a rejection of the zone and a move to the downside. So basically, the market is currently at a quite strong supply area from which we expect the market to give us a nice shift to the downside. Going down on the daily time frame, what we can see now on the daily, we can clearly see that the market has created a quite nice impulse to the upside, retracement, and we definitely expected a continuation to the upside, and for the market to go and test this structure specifically. In creating this move to the upside, the market has completed this impulse correction and impulse pattern to the upside, also rejecting the previous resistance here, now turned support at this area. In fact, here the market had clear resistance, starting this move to the downside, broke above, turned support, retest, and you expect the continuation to the upside. Specifically, in retesting this level, the market also retested the confluence of the Fibonacci taken from the low to the high of the impulse. Specifically, the market went for a test first of this 0.618, aka the golden ratio, then the 50%, and then the market exploded to the upside, exactly as we wanted to see. Now, if we go and see what is the situation on the 4-hour time frame at the moment, what we can see that at the moment the market is starting to fail to break above this high. Now, why is the market starting to fail? Because if you remember, if you have a W formation in the market, okay, if you have a W formation, what do you expect? You expect the market to give you a move to the downside, specifically to the previous resistance, now turn support. So basically to complete the W formation at the neckline. So immediately, also from the daily time frame, we can understand that we have a downside target at this level, which is the previous resistance, which is now turn support, also on the daily time frame. So we have a daily target that is a little bit above the weekly target, just to be sure. Now, if you remember, we capitalized with students on this move to the upside because it was pretty expected. We had this weekly candle here, that the next one is supposed to fit in the wick, and we had this impulse correction, impulse pattern to the upside also on the daily. So it was quite expected that the market would have given us this move to the upside. In fact, with students, we capitalized on this move to the upside for a more than 1 to 3 risk to reward to the upside on this trade. And now we are out of the trade because we have taken profits and we want to see the market give us a move to the downside. However, we can't be taking the short yet because at the moment we still don't have any confirmations on the 4 hours. So before I show you how we'll be approaching this situation with students, let's go and give a quick check at what we have from a COT perspective, so commitment of traders. What the biggest banks and institutions are currently doing from a pound and a JPY perspective. Now, starting from the pound, what we can see that we went from minus 36K net positions all the way up to minus 13K net positions. So clearly institutions were buying the pound. So we definitely wanted to see this move to the upside, which was even more confluence to the long side for our long trade. But then with the last report, we can see that institutions closed 6K longs, opened 3.4K shorts, and we can definitely expect a move to the downside because institutions have started shorting the pound, with net positions decreasing and shorts reaching 64K. And if we go and see what we have from a JPY perspective, we can see that on the JPY, longs have been increasing. We went from 42K to 62K, and shorts have been slightly increasing, but it's pretty clear the net positions have been increasing from the 16K that we had here all the way up to 28K. So JPY is getting bought as well from institutions. So in the short term, GBP is getting sold, JPY is getting bought. Can we expect a move to the downside? Yes. So after we capitalized on this move to the upside with students, we are looking to capitalize also on this move to the downside. However, it's very, very important to say that if we go down on the 4-hour time frame, and why it is important to go on the 4 hours, because as usual, monthly, weekly, and daily time frames are the best time frames for the direction of the market. But the best time frame for entry is the 4 hours. And on the 4 hours, everything is still bullish. The market is still creating higher highs and higher lows. We still don't have any sign of bearishness, yet, unless from this double top that the market has tried to create, but is still not confirmed. The market can easily continue to the upside, and this is just a natural correction before the continuation to the upside. So how we will be approaching this situation with students? Now, we know that the market is inside of a supply area, also on the daily and on the weekly time frame, and we know that on the weekly we have the double formation as we have just seen. So what we will be doing is monitoring price action with students inside of this area on the 4-hour time frame, waiting for the market to shift from a bullish market as it is right now to a bearish market. And if the market will shift from a bullish to a bearish market, at that point we will be adding GBP, JPY to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and completion of the pattern on the weekly at the previous resistance, not on support on the daily, and for the market to reject this quite strong supply area. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.